We check in now on the latest cattle market news with our market update, brought to you by CattleFax.
Hello, I'm Marcus Bricks with the CattleFax update. When selling finished cattle ready for slaughter, the cattle feeder has a few options. In the past, the most common sales were negotiated cash sales, where the packer's cattle buyer directly quotes a price to the feed yard. Today, most cattle are purchased on a grid or formula base, where some cattle are negotiated in the cash market and the rest are priced off these. The cattle feeder can also accept a forward price, where a basis is established weeks or months in advance. Each pricing style has its advantages and disadvantages and perform better or worse depending on the current market. In quickly uptrending markets like 2014, forward price cattle tend to not capture the price increase as well as other forms of marketing. Short-term upswing is sometimes forfeited to accept a basis position, making a trade-off to lower exposure to price risk. In 2014, on average, live cattle sold in the cash market brought in 4.8% higher prices than those that were forward contracted. Cash cattle sold on a dressed basis did even better compared to the forward contracts, selling 9.4% higher on average. On the flip side, in a bear market like we're currently facing, forward-priced cattle can perform better than negotiated or formula-priced cattle. Year-to-date in 2015, live cattle sold in the cash market have been 3.4% less than forward-priced cattle. Since July 1st, the premium is even wider, with cash cattle selling for 6.3% less. From this year's high to last week's market, the 5-area cash live cattle price has now seen a 23% decline. Measuring from the same week that cash cattle set the high, the delivered prices for forward contracted cattle have only fell 7.5%. The relationship between negotiated cash sales and forward price sales is more variable than the relationship between cash and formulas because of the time factor. In the last 3 years, cash cattle have sold for an average of 1.38% less than formula cattle, with a standard deviation of roughly 2%. Bottom line, cattle feeders should not limit their marketing strategy to just one option, but evaluate the market trends and choose a marketing strategy that best fits their risk tolerance. For the Angus Report and CattleFax, I'm Marcus Briggs.
The CattleFax segment is brought to you by AgriClear. Buy and sell cattle in the United States and Canada with anyone, anywhere, anytime, with confidence. AgriClear, cattle marketing on your terms. Visit www.agriclear.com.